Hello or good afternoon, whatever that might be the case where you are at the moment. My name is Maria Krambia-Kapardis. I'm a professor in forensic accounting at Cyprus University of Technology in Cyprus. My background is an accountant by profession, but I've spent the last 30 years in researching fraud, corruption, anti-corruption, and basically forensic investigation. Hence the reason I will be discussing with you in the next 45 minutes or so the issue on how to be best prepared and to have done your homework well before you come out and say there has been a fraud or corruption in a particular company, in order to avoid being caught up in a SLAPP case. There is a very good video on YouTube, which unfortunately I cannot load up onto this Zoom recording, on conscious bias, that I would suggest that you have a look at your free time. It only runs for about 20 minutes. But we, above all, in addition to have a conscious bias or avoid having a conscious bias, we need to act professionally and ethically. And in order to do that, we need to follow some basic steps in fraud investigation. Now, this presentation is split up into 3 parts. The first part is the etiology of fraud and corruption. I'd like to set the scene. Some of you may not be quite well versed with the topic of fraud and corruption. And then we move on to part B, which is the skills required to detect fraud and corruption. And then the skills required in interviewing suspects and gaining evidence. It's very important, particularly in your case, to identify that evidence, protect that evidence in order to stand up in court. You don't know when you might be needing it. And then part C, maintaining high ethical level of standards during your investigation and interviewing process. So let's move on to part A. In part A, we're looking, as I said, the etiology of fraud. There are a number of theories. The first theory is the fraud triangle, which we'll discuss, and there is the fraud tree by the ACFE, the fraud and corruption schemes. We need reliable evidence to support and claim any allegations we make. Okay, so the first theory explaining fraud is the fraud triangle in 1971. Which was emphasized by Cressy. He proposed that we need pressure, opportunity, and rationalization in order for somebody to commit fraud. Now, in 2001, I proposed a different model, the ROP model. And in the ROP model, following a number of major fraud cases that I was looking at, I've found that not only do we have to have opportunity for committing fraud, or the fraudsters have to have the opportunity. And what do we mean by that? In this case, there might be opportunity created because of company characteristics. There may be weak internal controls. There may be a criminogenic corporate culture where you see your CEO stealing from the business, so you are only the cleaner. So you say, well, if he's stealing from the business, now a television or a video every day, then why can't I do the same? So that's the criminogenic corporate culture. And there might be also situational factors. There may be corruption and fraud all around in the community. You know, there are some cultures that it is okay to steal. It is okay not to submit a tax return. There may not be institutions set out to investigate fraud and corruption. The attorney generals, the auditor generals may not be well versed on how to investigate the police. So the fraudsters see these opportunities, see these chances, and then they commit a fraud. These persons, who are these persons? Can anybody commit fraud? There might be, what I have found through my research is that these individuals have crime-prone personality, as we will see shortly, and they have motives. They have a reason. Why are they doing this? But always, as Cressy said, they always rationalize, they always justify what their reasons are, why they stole from the business. In 2004, another model was put out by Wolfs and Hershman, where they are arguing that you also need capability. Okay, so the person must have the capability to recognize the open door way as an opportunity and to take advantage of it by walking through, not just once, but time and time again. The missing correlate in the fraud triangle has been the person, the corporation, and the community. Okay, so we've discussed over and over again this issue of pressure. What do we mean by pressure? Now, pressure is divided into 4 main groups. There are the financial pressures, vices, work-related pressures, and other pressures. It has been found by surveys that approximately 95% of all frauds involve either a financial or a vice-related pressure. Now, there are a number of vices. These are the worst kind of pressures to commit fraud. They are gambling. So people may be stealing from their employer, thinking that they will go and gamble, and tomorrow morning, because they will win, but they never win, in playing cards or at the casino, they will put the money back. And of course, because they haven't won, the next day they will steal some more, go and gamble, and come back and steal some more, and so on. Or drugs, or alcohol, or expensive extramarital affairs. There are also real-life examples. The dad that stole from an employer for his daughter's dowry. He had to build a house. It was expected of him that in order for his daughter to get married, she had to have a house. So he was stealing from his employer. Women, a number of women, that's why I have it in plural, a number of women who stole money to fund their lovers. Okay, they have extramarital affairs. A couple that had expensive luxury car addiction. They just wanted to drive to work every day with a different luxury car, owning a different luxury car. So one day they would drive to work with a Ferrari, the next day with a Lamborghini and Maserati, and so forth. The CEO who embezzled for personal gain, or a megalomaniac doctor. So these are all examples of major fraud cases that I've looked at both in Australia and in Cyprus. There may also be work-related pressures. One wants to get even with his employer, her employer. They feel that they are working so hard, but their work is not being recognized. They're feeling dissatisfied with their job. They fear of losing their job, so they want to steal. They're being overlooked for a promotion. People next to them in the same office are getting promoted and they are not, or they feel they are underpaid. So they steal from their employer to get even. Of course, there are other individuals that they work so hard, they never go on holidays. And you think that they are very precious employees, but be careful of these employees, that they never take a sick leave. They never go on holidays. Their child might be sick, but they still come to work. They might be getting kickbacks. They may be committing fraud. Opportunities, lack of controls, lack of internal controls, no physical controls, no segregation of duties. The doors are being open. There are no passwords into getting into the system, into the software. Inability to judge performance quality. Failure to discipline fraudsters. There have been companies where they find the fraudster, but they don't want the negative advertisement, then they don't want the negative publicity coming out. These cases is sometimes are banks that are doing that. So they just hush the system, hush the problem, they put it under the carpet, but the problem is there. You have a fraudster. You have a sitting cancer in your system. Okay, you've got to get rid of it. There are lack of access to information, ignorance, apathy, incapacity, lack of audit trial. Now, let's look at what do we mean by profiling fraud offenders. And it was much easier when I started doing this work back in the 1990s. But in general, these individuals that are committing fraud, they are autocratic. They don't want you to dispute them. You go and question them and you ask them, why is this invoice not signed? Why is this delivery docket stated different address than their factory? And They don't want to answer to you, or megalomaniac, or they have low self-control, or they're narcissists. And as I said, they always justify their action. They feel that they deserve more. I'm only borrowing the money and I'll pay it back. I'm just going to gamble, win tomorrow, I'll put it back. It never happens. Nobody will get hurt. It's for a good purpose. I've got to build a house for my daughter. Otherwise, she's never going to get married. I pay more than my fair share for taxes. So why should I declare this additional income? Why should I lodge a tax return? Why should I be telling the government that I am doing this second job? The government wastes money. So I deserve some money for my family. Now, there is a very good website that if you want to get very well versed with this issue of fraud or acquire, if you like, the qualification of certified fraud examiners, you can do so by looking at that particular website. Now, ACFE has put out the fraud tree. They are saying that there are different types of fraud. And these particular frauds, let me just move this around so you can see it better. We have corruption. Corruption can be due to conflicts of interest, purchasing schemes, sales schemes, bribery, kickbacks, bid rigging, illegal gratuities, economic extortion. There may be asset misappropriations or financial statement fraud. So yeah, we don't have time to go through all of them, but please feel free to visit that website, identify the fraud tree, and be better aware of it. There may be fraud against an organization. Okay, so it might be its employees, its customers, a third person, a hacker gets into the system, or there may be a fraud on behalf of or for an organization. Okay, so the organization is stealing money from the government or some other company. We need to differentiate, however, between criminal and civil responses to fraud. Okay, what is the purpose of a criminal investigation? To right a wrong for punishing the offender. And the offender would go to jail or would have to pay a fine, but we need to prove beyond reasonable doubt that the case has occurred. Whereas in a civil case, we want to obtain a remedy, and the consequences are restitution or damages. In order to prove this case, it is on the balance of probabilities. Okay, what do we mean by asset misappropriation that I've mentioned earlier? Sorry about that. What do we mean by asset misappropriation as mentioned earlier? It is stealing assets, stealing receipts. It could be done by an employee or a customer or in collusion. The ACFE, in its recent report to the nations, has found that there are a lot more cases now happening in collusion. So there may be two or more individuals colluding to commit the fraud. Whereas in the past, individuals were carrying the fraud by themselves. Nowadays, because these frauds are becoming more complicated, you do need, or these individuals would need, somebody from with different expertise so they can help them to commit the fraud. I should mention, however, once two people know the fraud, it is easier to find out. Okay, it's like keeping a secret. A secret is good enough, and it can be kept a secret if only one person knows it. Once it is two people knowing it, it is likely to come out. Asset misappropriation can also be stealing of assets on hand or disbursement fraud of vendor alone or in collusion. Okay, so we may have fraudulent disbursement schemes through billing. So you hand in a false invoice, if you like, so you can get paid, even though you haven't completed that work or haven't offered that work. Expense reimbursements, check tampering, payroll, wire transfers, cash register disbursements. Now, what do we mean by wire transfers? Any scheme in which a person steals his or her employer's funds by fraudulently wire transferring the funds out of the employer's bank accounts. Registered disbursements. Any scheme in which an employee makes false entries on a cash register to conceal the fraudulent removal of a cash. The least costly of all disbursement schemes. So yeah, you might have somebody sitting in a cash register in a supermarket and makes false entries, or puts in a return when the return hasn't occurred, a return of goods. Theft of inventory and other assets, any scheme involving the theft or misappropriation of physical, non-cash assets such as inventory, equipment, or supplies. I do remember of a particular case where a CEO was buying works of art for the business, or at least billing the business, but the works of art were going to his own house. In another business, the CEO was having his house renovated at the expense of the company, and he was billing the company as if the various branches and offices and shops kept by that particular company where renovations were taking place for that particular company. Theft of inventory and other assets or securities may also be the case. Any scheme involving the theft or misappropriation of stocks, bonds, or other securities. Now, identity theft is used to describe those circumstances when someone uses another person's name, address, social security number, personal ID number, bank and credit card details, and they create an identity for themselves. So somebody goes through my rubbish bin or my computer system, identifies my identity, my name, my security number, my ID number, and creates another identity of Krambia-Kapardis, goes to the bank, gets a loan on my name that I'm not aware of, and uses that money. And by the time I find out, my credit rating has been destroyed. Or he may contact the bank and say that my address has changed, and please forward any correspondence as well as a new credit card to that new address. So I never get to find out that a new credit card has been issued in my name. So we need to think, how do we eliminate an identity fraud in this day and age that we've all moved to our smartphones? All our information is on this smartphone, on our laptops, on our tablets. So first of all, for identity theft to take place, you need to gain information, verify that information that it is correct, accumulate various documents, supporting documents, because nowadays the bank will say, okay, can you prove to me that you are living in this particular address, Krambia-Kapardis? So that particular person will have to create, if you like, an electricity bill, a utility bill with my name in a different address. Not very difficult in this day and age, is it? Cover up actions and then start using the card. First of all, go off to a petrol station and put petrol for 20 or 30 euros. Once that gets through, then they go off to something more advanced. They go and buy something for 100 euros, 500 euros. And then they use it for a lot more. So the stages, as mentioned here, is first of all the discovery, gaining information through searching trash, stealing mail, phishing, scanning credit card information, or through and then verifying this information that it is correct. Okay, just giving you a few minutes to read through those notes, and we'll revert in a second. Okay, and then the stage 3, as mentioned earlier. Okay, where you test the stolen information. You go to the petrol station, as mentioned, you see that it works, and then you use face-to-face transactions to see if anybody has recognized that Krambia-Kapardis is someone else. And once they get through that, then they go off to a lot more advanced level of fraud. The perpetrator might buy large ticket items, take out a car or a home or other loans, establish phone or wireless services, use counterfeit checks, open new bank accounts, file for bankruptcy, report victims' names to the police, opening new credit card, change the victim's mailing address. Now, how do you identify? How does one identify this information? Dumpster diving, scheming, social engineering, stealing wallets, sneaking into a victim's home, shoulder surfing, phishing, stealing money. How can we minimize this risk of our identity being stolen, if you like? Cut your mail from theft. Opt out of pre-approved credit cards. Check your personal credit information at least annually. I'd say monthly. Got social security card numbers. Safeguard all personal information. Guard trash from theft. Protect wallet and other valuables. Protect the home, the computer, and your passwords. Prosecution of identity theft. When identity theft is committed, the perpetrator can be prosecuted criminally and or civilly. For prosecution, it is necessary to show the perpetrator acted with intent to defraud, usually easy to prove if evidence of the fake identity used to purchase an item, open an account, or obtain a credit card is collected. You may have received, some people call it Nigerian schemes because they've started off in Nigeria, but they are coming on from everywhere now. This is one particular example I have found. We may also have come across consumer and investment schemes, telemarketing frauds. Fraudsters set up giant rooms, referred to as boiler rooms, in rented offices where they train salespeople to find and defraud victims. They move from city to city using different names. Unwary investors lose about $1 million every hour to investment fraud promoted over the telephone. Elderly are more susceptible to telemarketing fraud than almost any other type of fraud. Now, there are unreasonable promised returns or rates of return. There are investments that do not make sound or business sense. Pressure to get in early on the investment. So they say to you, if you don't invest today, you're going to miss out. Somebody else is going to come in and get that profit instead of you. Use of a special tax loophole or tax avoidance scheme, a business with a history of bankruptcy or scandals. Divorce fraud. Most divorce fraud litigations result from two allegations. The plaintiff spouse claims that the defendant hid assets so they would not have to be shared or taken away, or the values assigned to the assets were unrealistically low, thus resulting in an unfair divorce settlement. Bankruptcy fraud. This type of fraud is critical because of the impact bankruptcy filings have on the creditors, in this case, you, the banker. Monies defrauded from a bankruptcy never reach the pockets of deserving creditors and investors. Now, the loss of faith in the legal process or the bankruptcy by creditors and investors can have a ripple effect in the economy through the tightening of credit, the rising of interest rates, and the subsequent economic reactions. The two most common bankruptcy fraud schemes are bust out and the fraudulent concealment of assets during or in contemplation of a bankruptcy. Bust out may take several forms, but essentially involves intentionally obtaining loans or purchasing inventory on a credit basis and concealing or absconding with the proceeds from the loan or sale of the inventory or with the inventory itself before creditors are paid. There are many types of frauds. Fake schemes, match fixing, dirty secrets of the car industry, insurance fraud, tax fraud, online fraud, senior scams, mortgage fraud. Now, I'm sure you have heard of the Ponzi scheme. Charles Ponzi was the first one to have invented this type of fraud in the 1920s. Now, how does it work? An investment scheme that lures new investors by offering unusually high payouts. So, and one particular investor comes in, pays 10,000 euros, and he gets a very high return, or at least he thinks he gets a very high return. He receives that high return for a couple of months. Then he invites his friends and relatives to come on board to make money just like him. So more people come in, they pay their money, and the fraudster takes the money from the second person, gives it to the first, and keeps some for himself. Then the third person comes. He takes some of his money, gives it to person B, person A, and so forth, until a lot of people come in, and then the whole system collapsed. Now, there have been many cases. Whilst this is a 1920s case, the Ponzi scheme started in the 1920s. Even Madoff, a few years ago, was using it in the United States and defrauded billions of of US dollars. There may also be the pyramid, where you're starting off, recruits must pay an early fee to join this exclusive company. The more you pay, the more benefits or privileges you get. Then you recruit more people to come in and pay, and so forth, until you reach right at the top. And the person who has invented the pyramid, if you like, takes all the money and leaves the country. Money laundering. Okay, you may be collecting, or somebody might be collecting dirty money, either drug trafficking or trafficking of guns, and places that money in a bank or a banking institution to clean it, to launder it. And then that money is transferred to different bank accounts all over the world. It's being lost into various accounts. And then eventually it's being integrated, and the individual buys luxury cars, financial investments, commercial industries. Or they might be buying nowadays, instead of putting the money into the bank, they buy insurance policies or works of art directly. So this is when they launder the money. There have been many, many mega fraud cases. I've just selected a few of them that are on the internet. This information is on the internet for you, where the powerful, the elite in communities want to get more money. We've had the Enron case, the Welcome case in the United States, Madoff with the Ponzi scheme in 2008, 17 billion. Mr. Tanzi in 2003, the Parmalat case, 14 billion. 2002, Jean-Marie Messier, the French businessman who was a chairman and chief executive of the multinational media conglomerate Vivendi, misappropriated 17 million. 1990, the well-known British case of the Turkish Cypriot Asil Nadir, who through window dressing misappropriated 380 million. 1992, Listen and the Barings Bank, 1.3 billion, where the Barings Bank just collapsed. So we need to be well aware that these cases do occur. Now, how can we, in addition to misappropriation of assets, there may be misstatements of financial statements. How can that happen? And what is the benefit? They may be overstating stock, inventory, fixed assets, bank. So one may be saying that they have 2 billion in the bank, whereas they don't. So their assets, their bank balance sheet looks healthier. More investors come in, or they get a credit or a loan from the bank. So more investors come in, and then eventually that particular company just collapses. They take the money and run away. So be careful with overstatement of assets, fixed assets, banks, understatement of liabilities. So they might hide a liability, or understate expenses, overstate their income, understate income to pay less taxes. So that's why you need auditors, and you also need forensic accountants to be able to be looking at all of this. There may be misstatements because of payroll fraud. Some of you might have heard of the dummy or the ghost employees. You create an employee that doesn't exist. So I'm in charge of the HR at the organization where I work, and I create a phony, a dummy employee in the name of my son. And that particular person gets a monthly payment, even though he doesn't work for the company. Or the salami method. Salami method is where you cut a little bit from every pay, from every wage, from every monthly payment, 10 cents, 1 cent. Nobody will notice if 1 cent is missing from their pay. So eventually it does come up to a lot of money. Or you may create phony suppliers, or through lapping, where you take it from one customer, giving it to the next, and so forth. Third-party fraud, insurance fraud. There have been many cases of insurance fraud, and insurance companies now are appointing their own investigators. Industrial espionage, or email schemes that you need to be aware of. Now, corruption. According to the ACFB recent report to the nation, there have been increases in corruption. let's say an increase in mega corruption, in grand corruption. Corruption at the very, very high level. We are no longer talking about of bribing. We are no longer talking of giving 500 euros to a doctor to jump the queue so you can have an operation. We are talking of grand corruption. Now, grand corruption or corruption is any scheme in which a person uses his or her influence in a business transaction to obtain an unauthorized benefit contrary to that person's duty to his or her employer. Now, there are different types of corruption, as stated by the ACFE. There is the conflict of interest, any scheme in which an employee, a manager, or an executive has an undisclosed economic or personal interest in a transaction. Example could be when a manager establishes a beneficial relationship with an organization in which he or she has a personal financial interest. Bribing, any scheme in which a person offers, gives, receives, or solicits something of value for the purpose of influencing an official act. So it's not only receiving, but it's also paying a bribe. That is an offense. Illegal gratuity. An example of that would be a manager is influenced to make a financial decision based on undisclosed gifts or awards. An extortion. What is the difference between an extortion and illegal gratuity? Is when the vendor threatens an executive into a specific course of action. So if you don't give me this money, you're not going to get the tender. You're not going to get the job. You've got to pay me, or you've got to do something in return for me to offer you that position. So we've seen conflict of interest. Nowadays, there is a lot of discussion as well on lobbying. A lot of countries, including my country, has passed legislation on lobbying. Lobbying is legal as long as it is done ethical and it is transparent. So as long as you know who is being lobbied and why. Revolving doors. What do we mean by revolving doors? So we could have a high technocrat, a high official in the public sector, let's say the Minister of Education, resigns, and the next day that he resigns, he becomes the CEO of a private university. Okay, so that's a revolving doors. There might be government connections for personal gain. Now, I've mentioned before grand corruption or organized corruption. That's when they lead, the politicians or the technocrats, pass legislations or change procedures to benefit themselves when they abuse the system through bribing, nepotism, corrupt practices to enrich themselves. That is high-level corruption. So let's say, for example, you have a mayor or you have councillors in a particular municipality where they are construction, they have a construction company, and they convince the authorities to rezone a particular area so they can build a 6th or 7th floor building in a residential area where up until recently only a 2-story or a 3-story houses could be built, and they rezone a particular area so they can enrich themselves. Now, obviously, there are technocrats might be getting something in return. And these particular individuals shouldn't be making decisions like that because they have a conflict of interest. So this is where you have technocrats, you have elected individuals making decisions that affect the life of everybody else, regardless of the impact of the environment and the financial impact to other people.